You're living the dream, posting content, growing your audience, and earning money from brands. But the CRA, they're watching. Whether you're at 5K or 500K. Did you know that Canadian influencers can make anywhere from $50,000 to over $500,000 per year? And if you're not reporting your brand deals, PR, gifts, ad revenue the right way, you're not just skipping taxes. You might be setting up yourself for a CRA audit. By the end of this video, I'll walk you through exactly how influencer taxes really work in Canada, including write-offs you didn't know you could claim and mistakes that could cost you thousands. If you're a creator trying to grow a real business, hit the subscribe button right now because I break down tax strategies like this every week. But before we dive into tax loopholes and CRA rules, let's get super clear on what counts as income. Spoiler, it's more than just brand deals. Think influencer income is just about one brand collab? Not quite. If you're building a creator business in Canada, the CRA sees you as self-employed. That means every dollar you earn from brand deals to affiliate links is reportable. Here's what actually counts as taxable income. Brand sponsorships, even if it's paid in products. Affiliate sales, those referral codes you drop, yup, that's income. Platform revenue, YouTube, AdSense, TikTok Creator Fund, Instagram bonuses, free products and PR gifts. If there's any expectation to post or review, CRA treats it as barter income. The bottom line, every stream of income adds up and the CRA wants its share. So now that you know what counts as income, let's talk about what you need to do with it, because missing even one tax deadline could turn your side hustle into a financial headache. April 30th might feel like just another day, but for influencers, it's a deadline you can't afford to miss. As a self-employed influencer in Canada, you're not a regular employee. You run a business. That means you're on the hook for reporting all income and paying tax on time. No joke, no exceptions. First things first, as a social media influencer, you're required to report all sources of income. That includes brand deals, affiliate marketing commissions, sponsorships, and even gifts from followers, even if they don't have a monetary value. This is done using a form called T2125 where you report your business earnings and expenses. No hiding in the shadows here. The CRA wants their share of every dollar you earn. Now here's where it gets tricky. While self-employed individuals get until June 15 to file the taxes, any payments owed are due by April 30th. So don't wait until the last minute. You could face penalties or interest charges. Once your income exceeds $30,000 in revenue, you're no longer a small supplier. You must register and charge and remit HST within 29 days of exceeding the threshold. In Canada, the tax rate ranges from 5% to 13%, and logging those remittances and ITCs correctly is essential. It sounds complicated, but staying compliant will save you headaches and cash down the road. Make sure you reach out to us and we can help you prepare your HST filing in a timely manner. But here's the good news. Not all of your earnings go straight to the taxes. In our next segment, we'll dive into how to track and deduct business expenses so you can keep more of what you earn. Stay tuned because these tips could put thousands back in your pocket. Ever bought a new ring light and wondered, wait, is this a business expense? Well, if you're a Canadian influencer, the answer is probably yes, because when it comes to taxes, knowing what counts as deductible literally puts money back into your pocket. As a self-employed creator, every dollar you spend to grow your brand from camera gear to Canva Pro is a potential tax deduction, but only if you track it properly and file it right. First up, home office expenses. If you work from home, you can deduct a portion of your rent or mortgage, utilities, internet, home insurance, and maintenance. Next, equipment. That camera, lighting kit, or editing software, they're all fully deductible. Even smaller items like tripods, microphone, they count as long as they're used for business. And don't forget professional services. Hiring an accountant like myself or a social media manager, all of those fees are tax deductible too. And trust me, outsourcing saves times and headaches. Finally, there's advertising and marketing. Whether it's paying for an ad on Instagram or building a website or hiring a designer for your logo, all of those costs add up, and yes, they are deductible. The key here is keeping meticulous records. Save every receipt, track every expense, and use tools like QuickBooks or Wave to stay organized. It'll pay off big time in the tax season. But wait, what if I told you there are even more tax deductions that most influencers overlook? Let me show you 3 surprisingly powerful tax deductions that could save you thousands if you know how to claim them right. But before we dive into these game-changing tax tips, make sure to hit that subscribe button so you never have to miss on tax strategies that I share on a weekly basis. So let's get into it. 3 tax deductions nobody talks about. Let's start with gifts. Brands love sending free products or swag bags to influencers. But here's the catch. Those gifts are taxable. If you receive a gift as part of a brand deal or as an expectation of a post, that's not a freebie. It's business income. You must include the fair market value of these received items in your income. For example, if a brand sends you $500 camera, that amount is added to your taxable income. But determining the fair market value isn't always straightforward. Items like custom-made goods or rare products can be tricky to value. And CRA wants more than just guesses. You need proper documentation, like the MSRP screenshots or invoice copies, especially for high-value goods. But wait, what about pets? Can Fluffy actually help you lower your taxes? Well, you can't claim your pet as a dependent, but some influencers have turned their furry friends into a legit business asset. If your pet is actively used for content shoots and helps you drive your business and earn income, like appearing in reels, brand shoots, or has its own audience, then yes, related expenses may be deductible. That includes costumes or grooming, vet bills, pet gear used for shoots, and much more. But most importantly, you must prove that your pet supports your business activities. If you're a Canadian influencer and has ever worked with US clients, you might be wondering, what about HST? Here's the deal. You don't need to charge HST on services outside of Canada. For instance, if you're earning ad revenue from YouTube or doing deals with the US-based companies, you'll report those earnings under exempt supplies. Just make sure to separate your taxable sales from your exempt ones. This simple step ensures that you stay organized and avoid confusion during the tax season. You've now got the inside track on what's deductible and what CRA keeps an eye on. But there's one more thing influencers need to think about: planning for the future. First up, consider incorporating your business. Corporate tax rates are lower than personal tax rates, so retaining income within the company can help you defer taxes. And don't forget about income splitting. You can pay a reasonable salary to family members who support your content. It not only compensates them, but also reduces your overall tax burden. Next, let's talk about retirement. Use tools like TFSA, tax-free savings account, to invest tax-free. No tax on growth or withdrawals. Or opt into RRSP, Registered Retirement Savings Plans, where contributions reduce your taxable income and your growth is tax deferred until withdrawal. Finally, stay ahead of quarterly tax payment. If you owe more than $3,000 annually, make sure you pay it in installments throughout the year. By taking these steps, you'll set up yourself for long-term success while avoiding interest and penalties. If you're a Canadian content creator and this felt like a mini masterclass, hit that subscribe button because I break down taxes and finances like no one else. Got questions about incorporation, HST, or your pet being in campaign? Drop them in the comments or book a one-on-one call and I'd love to help. And remember, smart tax planning isn't just about saving money. It's about building a sustainable career as an influencer. Thank you and have a good day.